Hello, it's Kenny Burdine. Now that September's almost in the books, I want to do another market update and talk through some things. I've talked a lot the last few months about, cattle slaughter and the backlog and stuff. I'm going to just kind of shift gears a little bit. So I'm going to hit prices quickly and talk about some calf-related stuff. Heavy feeders dropped about 25 bucks a hundredweight from January to April. They've gained back about 80% of that. I'm showing you these 8-weight steers that I like to track. That's my baseline for heavy feeders. They were in the upper 120s for the last full week of September. Groups around, groups in the mid 130s. So that's kind of where they are. They did pull back about $1 a hundredweight from August to September. Didn't really think they'd pull back at all. This always happens in the fall, but the April live cattle board is always at a premium to the June live cattle board. And as soon as we move past the point that the heavy feeders are really being priced on summer fed cattle prices, not spring, they tend to drop back. And I think that'll happen sometime towards the end of October, early November. But I think we can hold these prices a bit longer on these heavy feeders. I mentioned before, it's been a very flat calf market. Without the spring run-up, these calf prices have not varied much throughout the year, with some exceptions week to week, of course. But if you look at the monthly prices for the first 9 months of 2020, they've been in a range for these 5-weight steers between 142 and 148, which is unheard of. We almost always see a $15 or $20 hundredweight difference between, calf prices in the spring and then calf prices in the fall. I want to talk a little bit about calves specifically because we are coming into the time when a lot of folks are going to be weaning their spring-born calves. I always look closely at the market summary that comes out on Fridays, and the market reporters do a great job in this state, and we're lucky to have them. And a point was made in that Friday summary that the best demand was for long-weaned and preconditioned calves. And they made the point that that was inevitable with the changing weather patterns coming up and the potential for sickness coming up. So more premium all the time on calves that are not green and fresh off the cow, but that have actually been weaned through some sort of health program. When the market reporters use the word value added by cattle they report, that's their way of signaling those cattle have been weaned and have had some sort of health program. It may just be a single shot, but it basically means they're just simply not green calves. So what I've circled here to show you right now, I've grabbed that 6 to 650 range, and I'm just comparing simply the value-added calves to the non-value-added calves. So the green calves versus the weaned calves, and you'll see there about a $6 hundredweight difference in price. Similar story on the heavy sixes, the 650s to 700. Again, here the difference even bigger, about $9 a hundred. So just be aware that this is out there. It almost always is. And it typically gets wider in the fall as weather becomes more variable and so forth. So I think we'll continue this year to see more incentive to actually sell weaned calves versus green calves fresh off the cow. Two more things I want to mention. Over the course of the last, 8 years or so probably, I've done quite a few programs on livestock risk protection insurance. I'm not getting into the gory details here of how it works. I'll do a video this winter or something to kind of review how it works. But it works a lot like a put option. You're basically buying a policy that pays you if the CME feeder cattle index is below a certain level you choose on a specified day. It works like a put option, it's just not as flexible. So oftentimes I would push people, if they were big enough, more towards a put option. The reason why I really like it though, is that it's scalable. You're not locked into 50,000 pounds of feeder cattle like you are with a CME put option. So I like that fact. That's the only thing we've really got for smaller operators to use. Need to be aware of though is they have really increased the subsidy quite a bit on the LRP insurance policies. It was 13% when I first started talking about it. It was increased sometime last year, and it's just been increased again. So the range now is 35 to 55%, but even on those higher coverage level policies, 95 to 100%, there's a 35% premium subsidy. So if you've looked at LRP in the past and haven't bought it, it may be worth taking another look now because it's a lot more attractive price-wise than it used to be. Finally, I'll wrap up with this. You should be aware of this, but CFAP 2.0 is now out. Our department put out some information last week. It's a little bit simpler for cattle, maybe in the first round. There's just the inventory component, but payments of $55 a head are available. They're just not available on breeding inventory. So outside of your breeding inventory, You pick a date between April 16th and August 31st, and you get paid that $55 on the number of head that you had on that date. I always like to think about scenarios. So although I don't collect on cows, if I'm a spring calving cow-calf herd, I should have had calves on the cow during this time period. I can collect on those calves. If I'm a fall calving cow-calf herd that kept my fall 2019 calves past April, past April 15th, and a lot of folks did this year due to the market, I can collect on those calves again in CFAP 2.0. Obviously, if I'm a growing type operation, backgrounder, or stocker operator, I can collect on those calves as well that I had on the farm during this window of time. Sign up through FSA. It's very similar to CFAP 1.0. Deadline is December 11th of 2020. With my contact info, by all means, feel free to reach out via email, via phone, or hit me up on Twitter. Wish you the very best.